Stay with me until the end, because today we are breaking down one of the most talked about numbers in the Iraqi Dinar community, and we are going to do it calmly, logically, and based on economic reality. It is March 4th, 2026, and screenshots of a 4.21 rate linked to the Iraqi Dinar are spreading fast. Some are calling it the RV, some are calling it a leak, others are calling it proof that banks are about to pay out massive amounts. But before excitement turns into expectation, we need to separate what a screen shows from what a central bank officially declares. Let's start at the center of the story, the Central Bank of Iraq. This institution is the only authority that can officially change Iraq's exchange rate policy. Not a trading app, not a screenshot, not a private broker. The Central Bank of Iraq controls the official exchange rate regime, manages reserves, supervises banks, and coordinates monetary policy. If there were a true revaluation or redenomination, it would not remain hidden inside a single data feed. It would come with formal statements, legal documentation, and clear instructions to the banking sector. Now let's address the 4.21 figure directly. A number like that appearing on a professional trading terminal does not automatically mean a retail bank branch will exchange your physical IQD notes at that rate. In global finance, there is a critical difference between institutional settlement rates and retail exchange rates. Large banks and clearing institutions sometimes use internal ledger values to balance transactions between themselves. These values can be temporary, technical, or specific to one large transaction. They are not public consumer rates. Professional data systems can display internal or test values. Sometimes those values leak into aggregators. When that happens, screenshots go viral. But a viral screenshot is not a legal change in monetary policy. It is simply a data point, and data points without confirmation can mislead. Now let's apply economic logic. For the Iraqi dinar to move from trading in the thousands per US dollar to anywhere near 4.21 USD per IQD would represent a historic shift. That kind of move would either require a massive revaluation, backed by reserves and structural reform, or a redenomination process where zeros are removed and new notes are issued. These are not overnight events. They involve months, sometimes years, of preparation. Printing new notes, recalibrating ATMs, updating digital banking systems, rewriting contracts, and informing the public all require structured planning. And when major monetary reforms happen, international institutions are involved. The International Monetary Fund often works with countries undergoing exchange rate adjustments. The IMF looks at foreign reserves, inflation control, fiscal deficits, and banking compliance. A dramatic and sustained currency revaluation would almost certainly appear alongside public reform frameworks, not as a mysterious number flashing briefly on a trading screen. Let's talk about liquidity, because this is where many investors misunderstand the situation. A price only matters if someone is willing and legally able to transact at that price in volume. Even if an institutional platform showed 4.21 for a moment, if retail banks are not offering that rate to customers, it has no practical value to paper note holders. Liquidity means real counterparties, real settlement, and regulatory approval. Without those, a rate remains theoretical. Now consider Iraq's broader economy. Iraq is heavily dependent on oil exports. Oil revenue is priced globally in US dollars. A sudden extreme appreciation of the dinar would impact government budgets, trade balances, and import pricing. Exchange rate policy is not just about investors. It affects salaries, food imports, fuel prices, and domestic stability. Central banks move cautiously because millions of citizens depend on predictable currency policy. We also need to address redenomination clearly. Redenomination means deleting zeros from the currency. For example, 25,000 dinar could become 25 new dinar if zeros are removed. That does not automatically create wealth. It simplifies accounting and pricing. If Iraq ever moves in that direction, it would be announced publicly and rolled out step by step. Old notes would have a conversion period. Banks would publish procedures. There would be no secrecy. Another important factor is compliance. Global banking today operates under strict anti-money laundering rules. If a sudden revaluation occurred, large exchanges would trigger reporting requirements. Banks would verify the source of funds. Tax authorities in various countries would treat currency gains according to local laws. There is no secret bypass around compliance. Any legitimate exchange would move through regulated institutions. This is where scams enter the picture. Whenever a large number circulates online, some individuals claim they have private access, special redemption centers, or insider registration lists. There is no credible evidence that private registrations guarantee special rates in sovereign currency events. When legitimate currency changes occur, they are handled by regulated banks under public guidelines. If someone asks for upfront fees or promises privileged access, that is a red flag. Now let's compare this situation to other currencies people often mention. The Vietnamese dong is managed by the State Bank of Vietnam with export competitiveness in mind. A sudden extreme appreciation would hurt exports. Zimbabwe's currency history has involved hyperinflation and asset-backed experiments under the Reserve Bank of Zimbabwe. Each country's monetary path is unique. You cannot copy-paste one scenario onto another. What about the role of the United States? Because Iraq's oil revenue flows through global dollar systems, U.S. institutions indirectly matter. The U.S. Department of the Treasury and the Federal Reserve System oversee aspects of dollar clearing and international banking coordination. Large currency reforms affecting dollar reserves would likely involve coordinated communication at high levels. Again, this reinforces the point. Major exchange rate events do not stay hidden behind isolated screenshots. Let's also consider market mechanics. Thinly traded currency pairs can produce temporary spikes if a single transaction clears at an unusual level. Data feed errors can misreport values. During system testing, placeholder rates may appear briefly. Professional traders know that sustained pricing over multiple sessions, confirmed across multiple platforms, is what validates a move. A single isolated spike is not confirmation. Psychology plays a powerful role here. Many dinar holders have waited years for a potential RV. When a big number appears, hope intensifies. But disciplined investors rely on confirmation, not emotion. Acting on unverified claims can lead to rushed decisions, exposure to scams, or legal complications. So what should responsible holders do right now? First, secure your physical notes properly. Second, maintain documentation of when and how you purchased them. Third, identify regulated banks or licensed currency dealers in your jurisdiction. Fourth, consult a qualified tax professional if your holdings are significant. Preparation is rational, panic is not. If an official rate change occurs, here is what you would realistically expect to see. A formal announcement from the Central Bank of Iraq, updates published through government channels, adjustments reflected across major international bank platforms, and sustained pricing visible for days, not minutes. Retail banks would update their systems. There would be clear exchange procedures. That is how monetary transitions happen in the real world. You would also likely see temporary exchange limits. Banks could cap daily exchange amounts to manage liquidity and compliance checks. Processing delays would be normal. Paperwork would be required. Even in the best-case scenario, the path from announcement to full retail access would involve structure and regulation. At this stage, the 4.21 figure should be treated as a signal to watch carefully, not as proof of an activated revaluation. It tells us that unusual activity may have occurred within a data environment, but it does not confirm a change in national monetary policy. The Iraqi economy has been working through reforms, digital banking expansion, border control improvements, and modernization of payment systems. These developments are important, they strengthen infrastructure, but structural reform does not automatically equal overnight currency multiplication. Monetary policy is guided by inflation control, reserve protection, and financial stability. If you are part of an online dinar community, encourage responsible dialogue, share verified information, avoid amplifying unconfirmed screenshots, direct members toward official sources. Calm communities make better financial decisions than emotional ones. In conclusion, the difference between a feed number and a retail exchange rate is enormous. Only the Central Bank of Iraq can officially change the dinar's value. Major reforms would involve structured announcements, coordination with international institutions, and visible updates across the banking system. Until that happens, any isolated high number remains unconfirmed. Stay informed through official channels. Prepare your documents. Protect yourself from scams. Seek professional legal and tax guidance if your exposure is large. And remember, markets move through policy, liquidity, and law, not through viral images. This analysis is for informational and educational purposes only and does not guarantee any financial outcome. Currency markets involve risk, and policies can change. Always verify information through official institutions and consult qualified professionals before making financial decisions. Stay calm, stay prepared, and we will continue monitoring verified developments together.